Accounting. Okay, so we have completed with accounting policies. Right, next heading. Perfect. All right. Accounting as a measurement discipline. Next unit. Accounting as a measurement discipline. Unit number 6. Okay, here now. Accounting as a measurement discipline. What do you mean by accounting as a measurement discipline? What is the meaning of that? Okay, if you remember, I told you that accounting is language of business. Yes or no? Okay, to make this language clear to all, we should speak only one language. What is that language? So accounts understands which language? Money language. Anything that you do, as I told you, all business transactions and events that you have, that events and transactions should be measured in terms of, okay now what do you mean by this measurement is the question. What do you mean by this measurement is the question. Now, to measure the things, we have different logics. If you people remember, we have petrol. Petrol you measure how? Petrol will be measured in liters. Yes or no? Drive, you measured in what? Kilometers. Cloth, you measure in what? Meters. Okay na? One item is measured in liters, another item is measured in kilometers, another item is measured in meters. We should have some uniformity, right? Accounts is a language of business. One speaks Telugu, another speaks Hindi, another speaks Malayalam, another speaks Tamil. What will happen? Only English. We don't speak any other language. Like how we have like that, in accounting also we have a language. That language is money language. I gave you the examples also earlier if you people remember. What is this to you? Laptop. You put laptop another meaning 1 lakh. What is this to you? 1,50,000. What is this to you? Computer. Ante. So like that, anything which is there, you should measure in terms of money. So anything other than money, I don't understand that language. Okay now some units are in liters, some are in kilometers, some are in meters. I want to buy a banana. Shall I go to the market and say give liter banana, meter banana, kilometer banana? Emanali? I should use the word dozen. So dozen and any. Okay na? But I can't write in accounts dozen. I can't write in account liter petrol. I can't write in accounts 1 kilometer. Ala railin nenu. Liter petrol 100 rupees. Kilometer 10 rupees. Meter cloth 200 rupees. Dozen banana 60 rupees. Then you will get something called value, and this value is monetary value. So this process of assigning numbers is known as measurement. This process of assigning numbers is known as measurement. And in accounting, continuously we do this measurement. That too we do this measurement in a disciplined manner. That too we do this measurement in a disciplined manner. Okay, now what is that discipline? This measurement, if you want to do, there are three things that you need to follow in measurement. Okay, first you identify the objects or elements that you want to measure. So first understand what you want to measure. Okay, now then selection of standard or scale. Selection or standard or scale. And our standard, our scale, you may have any scale. As I told you, you say kilo, liter, meter, anything you say. I say only one thing, money scale. And this money is such a powerful thing which can measure anything. Such a powerful thing which can measure anything. It can also measure your per hour. When I take class, I charge per hour. Per hour my fees is 5,000 rupees is my fees. If someone calls me and asks me to give you a lecture, I'll give 1 hour lecture, I'll take 5,000 rupees. Okay. So you may have any standard of scale. Then we'll do then evaluation of dimension of measurement. Evaluation of dimension of measurement of that standard of scale. Okay. So what do you want to measure? Say for example, I have to measure 100 kgs of apples. How much per kg of apple? 200. So this is object I want to measure. This is the standard of scale that I have. Evaluate 100 kgs into 200 per kg. 100 into 200. 20,000. 100 into 200. 20,000. This is what is called measurement. And in entire accounting, we have this measurement. We keep on doing this measurement. Here, let's see what is that measurement. Measurement is vital aspect of primarily transactions and events are measured in terms of. So I understand only one language. Which language? Money language. Okay. Any measurement discipline deals with three basic elements of measurements. Identification of objects and events to be measured, selection of standard of scale to be used, evaluation of dimension of measurement of standard or scale. So three things are very important. Okati, identification of objects. Second one is selection of standard. E standard okate standard manaki. What is that standard? Money, always money. And last one, evaluation of dimension of measurement of standard or scale. Clear? Then we have some definitions for this. R.J. Chambers defined measurement as assignment of numbers. See, this is a very good definition. Em chestunnam manam? Deenni emannam? 1 lakh. Ante have you not assigned number to laptop? Deenni emannam? Deenni em chesavu? Assigned a number. Deenni emantam? Remote, AC, and I have assigned a number or not? So measurement is nothing but putting a number to it. Why for that? Coaching. Is there a free coaching? Coaching. Am I not taking fees for my services that I rendered? I assigned a number. So that is nothing but measurement. So tomorrow you become CA and you provide some services to the company, and to that company won't you charge? So what you are doing? Assigning the number. Or your services you are assigning the number. Simple logic. Or no? To objects and events according to the rules specifying the property to be measured, scale to be used, and the dimension of. Another definition. Kohler, measurement is assignment of system of ordinal and cardinal numbers to the results of the scheme of inquiry or apparatus to observation in accordance with logical and mathematical rules. What is ordinal numbers or ordinals? Are numbers used to denote the position of the ordered sequence, first, second, third, fourth. Whereas cardinal numbers are how many are there? 1, 2, 3, 4. So this is called ordinal or cardinal number. First, second, third, fourth. 1, 2, 3, 4. like that. Simple. What we are doing? We are only putting a number. Say for example, 20, 25 are sitting in this class. For the 20, 25 said roll number 1, roll number 2, roll number 3, roll number 4. What am I doing? Simple. Cardinal numbers I am assigning. He is first, second, third, fourth. Ordinal number. Ordinal, cardinal. What am I? That is max. This is accounts. What we say simply assigning a number. Once I am assigning a number, it is nothing but measurement I am doing. Yes or no? This is what is that. So Chambers' definition is widely used to judge how far the accounting can be treated as. According to the definition, there are three elements: identification of objects, selection of standard, evaluation. Clear? So this is what is the concept of measurement. Clear? Last one. Intro. Right. Introduction. Accounting is the language of business. Accounting is a language of business. Accounting is a language of business. All business transactions and events. All business transactions and events are all business transactions and events are measured in terms of money. Are measured in terms of money. Are measured in terms of. To make the language clear to all, to make the language clear to all, it should be measured. Make the language clear to all, should be measured only in terms of money. Measured only in terms of money. In accounting, there are various areas. Where measurement arises. Where measurement arises. Where measurement arises. So, accounting is known as measurement discipline. Accounting is known as measurement discipline. Okay? Copy this definition. First you copy this. After that, you need to copy this definition also. Two definitions, right? Next heading. First you need to copy this definition, then go for that. Last one first. Write this definition. Huh? Copy that. Have you written the two? Hello. Right, next. तो ऑन करो. चलो, see here. So the three things you need to write is that next you write heading. Two definitions are done. Next heading you write elements of measurement. Elements of measurement. Elements of measurement. See, so with the understanding that we got now, please look at the definitions here once. What is saying in the definition? Measurement is nothing but assignment of to object sign according to rules. Okay, the property to be measured and the scale to be used and the dimensions of unit. Clear? Then this definition, if you see, polar definition says assignment of measurement is a assignment of systematic ordinal or ordinal numbers. So if you observe both the definitions, measurement ఏంటి? Assigning numbers ante ante to any object or a thing. If you put a number, that is called measurement. Clear? So right, next elements of measurement. Right, there are three elements written. Really clear? No, right? Right, there are three elements of measurement. Right, first one, identification of objects and events. Identification of objects and events. Second, selection of standard or scale to be used. Selection of standard or scale to be used. Third, evaluation of dimension of measurement of standard or scale. Evaluation of dimensions of measurement of standard or these are the 3 points which are there in your what elements of the same thing which we discussed now. It has been given in 3 paras. Just you do this. See here now, no need to write anything. See here, objects or events to be measured. We have earlier discussed that accounting is a process of identifying, measuring, communicating economic information to informed permanent decisions by users. So accounting essentially includes, okay na? Decision makers need past, present and future information. External users generally need past information to be. There is no uniform set of events and transactions in accounting which are required for example, okay, example ichadu. In cash management, various cash receipts and expenses are necessary object sign. Ante whatever you are doing in that is necessary object sign events. Ippudu cheppandi, I am giving coaching. What is my necessary object and event? Teaching. Teaching. What is your necessary object and event? Learning. Okay, teaching is measured in terms of money. Learning is also measured in terms of money. Teaching per hour 5,000. Learning per hour 5,000. That is called measurement. Okay na? The example is next, standard or scale of measurement. In accounting, money is the scale of, as I told you, liter nundochu, meter nundochu, kilometer nundochu, but I understand only one language. What is that language? Okay, see money measurement concept which you have already seen. Okay, so different monies and dimensions of scale. You'll have a quantity, you'll have a price. Quantity into price will give you value. Clear? Accounting as a measurement discipline. This is what introduction I gave you already. How if you measure a transaction and event, accounting is full of that. This is only a theory. That's good. Next heading. Next item. Only 2 points on the 3 points on point. What is measurement? Elements of measurement. Valuation principles. That's good. Heading. Valuation principles. Valuation principles. Okay na? Chalo. 20. Write like this. Basic valuation principles. Ila 4 ga raskondi. Write this 4 in your page. Valuation principles. Valuation principles. Divide this into first one, historical cost. Second one, current cost. Second one, current cost. Third one, realizable value. Last one, present value. Four you take historical cost, okay na? 12. Listen to this first, later you can write. Chala simple things, good theory. I'll tell you that. Dintlo meeku two things already tells. Okay, first one, historical cost. I already told you in a concept called cost concept. You remember that? In the cost concept, all assets and liabilities also actually is measured at historical cost. What is the meaning of the word historical cost? Original cost. It is actual cost. It is factual cost. It is real cost. Avuna kada? Okay na? This is one of the oldest concept which we had. Cost concept. This is applied to especially all assets and liabilities. At what you have incurred in your balance sheet. In your balance sheet, your assets and liabilities should be shown at. The same thing in the introduction chapter, if you people remember, we have learned as a disadvantage. What was that? One of the limitation of accounting was what? Inflation. Ignores inflation. Avuna kada? What is inflation? Rise in prices. Rise in prices will not be there. Let's assume I purchased an asset with 10,000. Today the asset value is 1,50,000. What do you will write? 10,000 because of historical cost concept. Yes or no? Okay, we don't write this value. This itself is disadvantage. Dini manam chadivam kuda meeku gurtunte. Either you will understate or overstate your assets. You learned it or not? So this is what is your cost concept. Okay na? To overcome that difficulty, there is a new concept which is designed, which is known as current cost. What is current cost? Current cost is also known as replacement cost. Replacement cost. Best example to understand current cost. Student, I purchased my car in the year 2018 by spending 15 lakh. I purchased my car in the year 2018 by spending 15 lakhs. Today, in 2026, after 8 years, in 2026, after 8 years, I want to replace this car. I want to replace this car. Substantially same car, 8 years old, in good condition. Will it cost me 15 lakhs? My 15 lakhs is which cost? Historical cost. After 8 years, if you want to replace it, it won't be 15 lakhs. Two things. Replacement you want to do with old car, new car is the question to be asked. How many years my car is old? 8 years. 8 years old car, if I want to buy now, how much? 8 lakhs. No, sir. Same car of yours, which you purchased in 2018, brand new, I want to buy now. You get for 15 lakhs. How much will you get? 20. So this is known as replacement cost, or technically it is known as current ante now ra. Current ante me current ga. Current ante now. Now what is the cost? Now cost keeps on changing. This is one principle. Next, realizable value. Realizable value. Realizable value ante market value. Okay na? What is this market value? Say for example, I have one asset which I purchased for 10 lakhs in 2020. Now in 2026, I want to sell this asset. I want to sell this asset. I would like to understand how much I am going to get from, how much I am going to, that value is okay now. This is also known as fair market value. Ante in a orderly disposal, if I sell my asset, a unknown seller sells to an unknown buyer, how much you will sell? That is called as market value. Okay na? Say for example, my iPhone is there. I am in urgent need of funds. I go to the market. SR Nagar Chaurasta Kella. iPhone. Someone said, I will buy it for 130. 1,30,000 is known as realizable value. Okay na? To realize this, we will incur some expense. So, realizable value minus expenses on realization is known as net realizable value. Is known as net realizable NRV. So then SR Nagar Chaurasta iPhone antaru. A police fellow came. Hey, what is this tamashas? Come on, get lost from here. I said to police fellow, sir, you do one thing. I'm in urgent need of funds. I need 1 lakh. I'm selling my iPhone. Okay, if any buyer comes, I'll give you 5,000 anna. Police fellow could bill iPhone and bill said. Police fellow also. Okay na? So finally, I sold my mobile for 1,35,000. Some buyer came. Okay, 1,35,000. Police what came this time? Minus 5,000. And so net is called NRV. So 1 historical cost, original cost at which you acquired, replacement cost, substantially the same asset if you want to replace with old one, new one, and last one, realizable value NRP. Okay na? Next one, last one, present value. This is generally used in decision making. This is generally used in decision making, and this present value is also linked with something called future value. This present value is also linked with something called future value. Okay, I'll take an example and I'll explain it to you. Listen to this carefully. This you study at a inter level. These two you study at a inter level. Current cost, present value. Both you study at a inter level. Foundation lo undado. Foundation we already studied historical cost. Realizable value I'll tell you when we go to inventory values. Okay, na? These two we study at a foundation level. These two will be useful at a inter level. But still I'll give you an example for your idea's sake. You take this. Generally, present value is the technique which is used in decision making. Present value is a technique which will be used in decision making. What decision making is the question to be asked. What decision making is the question to be? I'll give you an example so that you will understand. But before I go into that, I'll give you equations. Present value, discount, will get future value, compound, will get present value. The equation. Even you learn in your maths also this equation. Okay. Now what is this compounding? What is this values that we need to understand? Look at this example. Look at these examples now. Okay. You know Hyderabad metro project? Metro project costed you 22,000 crores. Lay down the metro, it costed you 22,000 crores. Metro is who has done metro in Hyderabad? Company ra. L&T. The company which has done is L&T. First they kept money, no? They kept money. This is called cash outflow. Why you are calling it as a cash outflow? Cash is going out. Yes or no? Now, is it any dharamshala? L&T company mana dharamshala na? Kadu. L&T company is going to make money out of that again. Avuna kada? What they get again is called cash inflow. Em ostayi cheppandi? Tickets, advertisements, etc. Ilanti double ostayi. Okay na? L&T contract, let's assume, is for 10 years. So L&T invested how much? 10 years, whatever the cash inflows you will get from metro, who will take? KCR? L&T. Who invested money in L&T? Metro? L&T. So this is called cash outflow and they'll get cash inflow. Let's assume over a period of 10 years, they are getting 25,000 crores. How much? How much they have invested? How much they are going to get? This is called net cash flows. This is called net cash flows. What is net cash flows? Cash outflows, inflows minus outflow. Okay, na? How much is inflow? 25,000 crore. How much is outflow? 22,000 crore. How much we are going to earn? So shall I accept the project or reject the project? Why? 3,000 కోట్లు వస్తున్నాయి కదరా పిచ్చా 3,000 crores you are getting. ఏం జోకా? Okay? Aim and understanding says yes. You being professionals should not say yes. Say no. Adem sir, 3,000 crores వస్తున్నాయి కదా sir. Why you want to say no? Logic. 22,000 crores when you have invested? 2020. Okay. 25,000 crores are you getting in 2020? When you are getting then? 2022. 2035. Until over a period of 15 years, 10 years, you are going to get that 25,000 crores. For that we use a technique called present value technique. What happens in that present value technique? This is what will happen. There is one factor called discounting factor. Give you one typical example to it. Time not, I have spent 1,000 rupees. This is my cash. Spend and entra outflow. Time 1, time 2, time 3, time 4 time 5 ఒక 5 years example తీసుకుంటా. I'm getting this is outflow, ఇవన్నీ inflow 250 250 250 250 250. How many 250s? 5 250s. How much I am going to get? This is cash inflow. చెప్పండి ఇప్పుడు cash inflow is more than cash outflow or not? Shall I accept the project or not? Can't say, because outflow is T0 time naught. Inflow ఒకవేళ time naught ఉందనుకో I will say okay na. What is 1 rupee today, tomorrow not 1 rupee. Your purchasing power of a rupee will come down. That is called discounting. అంటారు దానికి రేట్ ఉంటుంది, డిస్కౌంటింగ్ రేట్. లెట్స్ అజ్యూమ్ ద డిస్కౌంటింగ్ ఈస్ 10%. దాని ఫార్ములా ఏంటంటే 1 డివైడెడ్ బై 1 ప్లస్ ఆర్ హోల్ పవర్ ఎన్. ఇది ఫార్ములా, మీరు ఎక్కడో మ్యాథ్స్లో కూడా నేర్చుకుంటారు, యాన్యుటీ అవి అని నేర్చుకుంటారు. ఓకేనా? సో ఆర్ ఈస్ ద రేట్, ఎన్ ఈస్ ద నంబర్ ఆఫ్ ఇయర్స్. సో 1 divided by 1 plus 10% whole power 5. So take out your calculators. Take out your calculators. Eva? Calculators తెచ్చుకోవాలి కంపల్సరీ క్లాస్ కి, because this and next is the last chapter. Tomorrow is the last day for theory. After tomorrow we'll jump into the problems now. ఓపెన్ చేయండి క్యాలిక్యులేటర్. సైంటిఫిక్ వాడొద్దురా, నార్మల్ క్యాలిక్యులేటర్ వాడండి. డోంట్ యూజ్ సైంటిఫిక్, ఇట్ ఈస్ అ నార్మల్ క్యాలిక్యులేటర్ తెచ్చుకోండి. ఓకేనా? చేయండి. 1 divided by 1 plus 10% అంటే 1.1 కదరా. 1 divided by 1.1 is equal to 0.9090. మళ్ళీ ఈజ్ ఈక్వల్ టు 8 4. మళ్ళీ ఈజ్ ఈక్వల్ టు మళ్ళీ ఈజ్ ఈక్వల్ టు మళ్ళీ ఈజ్ ఈక్వల్ టు ఈటీ అని ఒక బటన్ ఉంటుంది, అది చేయండి. 790. ఓకేనా? వాట్ ఈస్ దిస్ మీనింగ్ అంటే, టైమ్ నాట్ ఇఫ్ యూ 1 rupee and your rupee is discounted every year 10%, అంటే your rupee value will come down. చూడండి, gold. Today you need 1,50,000 rupees to buy 10 grams of gold. Last year 1,30,000 was enough to buy a gold. Before year 1 lakh was enough to buy a gold. Before year 60,000 was enough to buy a gold. And your purchasing power of a rupee will come down every year. Every year your purchasing power of a rupee will come down. Okay now, so we need to check what you are getting today, is it same tomorrow? No. Look at this logic. Today it is 1 rupee, after 1 year it is. The meaning ఏంటో తెలుసా? If someone wants to give 1 rupee after 1 year, ask them to give today 90 paisa, it is enough. ఎందుకు? Your 90 paisa will become 1 rupee tomorrow. Clear? Second year it will become 82 paisa. Third year 75 paisa. Fourth year 68 paisa. Last year అంటే today if you have 1 rupee, అంటే what you can buy today with 1 rupee, after 5 years you can have only 62 paisa. That is not enough. You need another 38 paisa to buy 1 rupee value. అంటే your rupee keeps on. సో ఇప్పుడు మల్టిప్లై చేయండి. 250 into 0.9090. 250 into 0.9090. 228. Next 250 into 0.8264. 206.6. 278. Next 250 into 0.1. 188. 250 into 0.6830. 170.178. 250 into 0.62. 155. దీని టోటల్ చేయండి. 228, 940. It seems to be 1250 for you over a period of 5 years. 1250 value today is only how much you are spending. Okay, cash flows, two types: cash inflows, cash outflow. Okay, if you net off these two, net cash flows మళ్ళీ two types ఉంటాయి: net cash inflows, net cash outflow. Net cash inflows ఉంటే accept the project, net cash outflows ఉంటే reject the project. Understood? This is called the story of. Am I clear? This is the logic which will be used. This is called discounting anamata. This discounting factor. 1 rupee will become 90 paisa, 82 paisa, 75 paisa, 68 paisa. Ante 5 rupees is nothing but 3 rupees. The purchasing power will come down. Okay. So if someone says, I'll pay you 5 rupees every year, 5 years, 100. From that fellow, you take 3 rupee 50 paisa, it is enough today. Because it will become 5 rupees after a certain period of time. Okay. That's what is the equation. I gave you this equation over here. Present value, future value. Ekkada rasenadi? The present value, discount, future value. Future value, compound. Kanni next level lo chadukunta. Clear? Chalo, right. Write like this, the diagram. Under that I'll give notes. Ikkada istanu. Here you write. Here you write. రాసారా? ఆ టేబుల్ వేసారా? అండర్ దట్ రాసుకోండి. హిస్టారికల్ కాస్ట్ మీన్స్ original price or actual price. Price or original price. All assets and liabilities are shown at historical cost. That is original cost. And real cost is original cost and real cost at which is acquired. Is generally used for assets, long-term assets. Is generally used for long-term assets. Second, current cost. Is a replacement. Is incurred for replacement of substantially a new asset. Or existing old asset. Substantially a new asset or existing old asset. It is an alternative mechanism. Is a alternative mechanism. The alternative mechanism, including is an alternative mechanism for cost. The alternative mechanism for next realizable value. Realizable value. It is nothing but market value. Is nothing but market value. Nothing but market. A willing seller sells to a willing buyer. A willing seller sells to a willing buyer. What amount realized? What amount realized is realizable. Realizable value minus expense. Realizable value minus expense is equal to net realizable present value. It is generally used in decision making process. Used in decision making of long term projects. Long term projects. Present value is nothing but discounted value of future cash flow. Present value is nothing but discounted value of future cash flow. Write these two, Nana. Write ila. Discounted cash flow. The last point. Value. Discount future value. Discount future value. Next, as future value, compound present value. Future value, compound present value. Then you write this. Take this diagram. Cash flows, cash inflows, cash outflows, net cash flows, net cash inflows accept, net cash outflow. Copy this and take a break. Continue tomorrow.